Hello, everyone. Welcome, welcome. I see the waiting room emptying out, so I'll let y'all all come enter. We're super, super excited to have you guys today. Another great webinar. Today, we're going to be focusing mostly on the state of auto transport as told by our second annual Super Moves report. And to help us do that, we have an awesome panel. One quick note we do want to share with everyone is that, especially if you're a carrier on the call right now or joining shortly, we have SuperCon coming up. So it is our first ever carrier conference that we are hosting. We're super excited to be launching our first annual SuperCon. So if you haven't already, and I'll put it in the chat so you have easy access, please make sure you claim your spots. I think we're just a couple away from hitting our first 50, which means you do get a little bit of a discount. So be the next two to get that. The link's in the chat. You can register and make sure you join us in September in Orlando. Some of these guys here will be there speaking, so we'll get to chat with you live in person. And with that, I will hand it over to your moderator, Mr. Matt Bradley.
And hey, another plug on SuperCon is we were talking about this uh Ezra, Doug, and myself 5 minutes ago. It's also Doug's dad's birthday. So September 15th and or 16th, one of the two is Doug's dad's birthday. And so he's thinking about bringing his dad to SuperCon for a present. But thank you everybody for joining. I think this is going to be a really exciting event. This is the second year we've done this. Why do we do this? We do this because obviously, the industry is changing, and we think at Super Dispatch we sort of have a unique view into how carriers are behaving, how brokers are behaving, how shippers are behaving. And one of the things that I believe we should do as a company is share that data with the ecosystem because I think that if everybody is better informed, you can make better decisions. And so with us today, we have Ezra Barrios from VG Auto, and I'll let Ezra describe his carrier operation, and then we also have Doug Belden from Tarpon Transportation, and they are a broker in the Southeast, and I'll let him describe his operation. So Ezra, maybe before we get going and into all the questions, you could give just a little overview on VG Auto.
Absolutely. Well, thank you. Thank you for the invite. VG Auto, we've been in business over 12 years, and we do car hauling, and we have a fleet made up of owned assets and leased on assets. So we have owner operators, and then we work nationally. So we run multiple different trailer types. So 5 spot Stingers, which are 9 spots. And what we do is really look at the market and try to create solid relationships with brokers so we can grow and meet their needs through the cycle.
Okay, and then Doug, why don't you tell us a little about Tarpon?
Yeah, so it's Tarpon Transportation. We're a non-asset based 3PL broker over here. We service the continental US and we'll do some moves in Alaska in and out of Canada. Don't really mess with Hawaii. Founded in 2004, first started brokering freight. That was before my time. I was about 13 years old. But the company in '04 started brokering freight. And then 10, 12 years ago, got into the car game, if you will. And since then, and I'd say especially the last 5 to 7 years, we've really tried to establish a good footprint in the auto hauling industry. As Ezra mentioned, always trying to find good partners. So always looking for solid carrier partners who do a good job, communicate well, exhibit professionalism, timeliness, so on and so forth. And thank you, Matt and Casey, for having us today.
Cool. Okay, so we had a little over 300 people register. I don't know how many are on the line, but certainly more than 100. We're going to cover four topics, and then we're going to save time for a little bit of Q&A. The four topics are going to be pricing, regional demand, resilience, and sort of what you're seeing in challenges. And then the last one is the future and how you see, technology or whatever happening in your business uh, evolving in the future. So let's dig in. So pricing and auto transport. what you see in the report is that you saw single VIN rates climb, you saw long haul demand surge, and then as we headed into 2026, you saw fuel really play a big role in pricing, and that started with the Iran conflict earlier this year, and has not really, at least from our perspective, settled back down. And so, Doug, as a broker, what are you seeing out there? How are you adjusting pricing strategies, customer conversations, et cetera, as the as fuel prices have surged?
Yeah, well, to tackle the whole fuel crisis, it's just you take the data. I mean, I've even used the Super Dispatch data that you have provided to all of us and use the charts and graphs and whatnot to, explain to the customer why these rates are up 40, 50%, right? I mean, essentially overnight, the fuel skyrocketed 30, 40%, I think. It's almost, up year to date 44% from last June. So, simply you got to just take the data, take it to the client, and explain to them this is why the prices have suddenly changed and suddenly hiked up. And if you're not willing to pay them, your car is not going to move. And you can go ask someone else, they're not going to have some cut rate price when they have to cover the cost of fuel. What was your other question again?
And then how are you seeing it? One of the things we talked about is how like fuel prices as you move west are
Oh,
increasing.
right, right. So yeah, so additionally, obviously, fuel prices are different across the continent. So when you're addressing, quoting jobs from East Coast to West Coast, you have to not only express the national average, but also the regional average. So if, they say, well, you quoted in the Southeast, you're only 40% higher, but over here going from, out to the West, you're 50% higher, there's different averages of fuel costs. So taking that data, showing them that data, and just being transparent about it and telling them that's what it's going to cost to get done.
Yep.
That's
And as
it's not too complicated. It's you just got to have an established relationship, and you got to let them know you're not just raising the rate so you can increase your margins. And in fact, the higher fuel prices have cut into our margins, right? And you're
Interesting.
used to providing a certain quote, and often you think you're covering it enough, even with the increase, and you're not, and you're barely making enough dollars to cover your overhead, and you're barely even seeing a margin, and you're getting killed by operational cost and so on and so forth.
Okay. And then Ezra, what are you seeing from a carrier perspective? I think you mostly move spot loads. I think it's not contractual. I think you don't pass through fuel surcharges. I'm not, but I think share with the audience sort of how you all operate and what you're seeing.
Yeah. So you're correct. We do spot, and that creates a host of challenges in this particular environment because, like you mentioned, we saw an increase in fuel in a matter of 2 weeks of over 40%. And that has caused that we literally have to absorb the rates haven't moved as quickly as the increase in fuel. The way we try to manage it's been very disciplined. So we're looking at a couple of things, right? First, understanding where our margins lie, which is really in empty miles. So it's understanding and training our operation staff on how to look at loads from that perspective. So rather than look at a load based on gross, which many dispatchers will do, it's understanding, does that load gonna include a significant amount of empty miles? Because a $1,200 load with a 200-mile deadhead, it's not the same thing as a $1,200 load with a 20-mile. The other thing that we're trying to continuously educate our dispatch is aligning more into loops or triangles. So looking at a rate not only from the standalone rate of one load, but understanding, is that load going to set us up for the next load? So that way we actually optimize the utilization of the unit and reduce empty miles. So at times it may mean turning down a load that is going to a market that we understand it's a dead market, or we cannot locate a load unless we move a significant amount of empty miles. So that's one part of our um, strategy. The other one is understanding route planning from a lane balancing perspective. So rather than just going from load to load, it's understanding, can we optimize a particular unit in a market by connecting the loads, even though they may look at first glance being lower rate, but when you put them all together, you optimize the revenue because you're running the truck less empty miles and you're keeping it moving it loaded in both directions. So those are the kind of big things that we're focusing on to manage some of the challenges in this current environment that has been a bit inconsistent. We saw rates go up one week and everyone's celebrating, and then fuel went up 40%. And then it was like, oh, hold on, what's going on? And then, it has been really, to put it mildly, a constant reassessing of our strategy and how we manage it to remain profitable. Because when your fuel, which is your second largest expense after labor, goes up 40%, you just don't get a lot of breathing room.
Yep. Yep. No, I think those are good insights. I think that I especially like the concept of, obviously the deadhead, and not every move is the same, and you have waiting time in addition to deadhead miles, and the combination of those two things can really change economics of any route. Um, Especially when fuel is where it is relative to where it was. Um, as we think about any last things you guys want to say about sort of fuel and what you're seeing out there?
I mean, to piggyback off Ezra about the whole deadhead situation, that plays a large part in quoting too. Often a client will only look at the type of car they're transporting and how many miles they're transporting it for, so they're not considering, well, why is your rate per mile so much higher from going to North Dakota? It's like, well, there's not much commerce in North Dakota. There's not many reloads in North Dakota. The driver's going to have to really add up some time, some miles, some additional fuel to find the next reload. So when quoting that job, you're looking to add on that cost as well.
Yep. Yep.
So, you can afford to pay the carrier enough to take a car to North Dakota or, a more desolate state.
Yep. Yep. Okay. How about high volume routes, regional demand? What are you seeing? Like, Doug, obviously, one of the things we talked about in the report, but we saw a surge in Northeast demand, and that could be just our customer base, not necessarily in the entire market, but we see some of the highest grossing corridors, which the report talks about. The Miami to New York move, as an example, is a big one. Doug, I think you do some snowbird stuff. Like, what did you see this snowbird season from just like a demand perspective? Was it normal? Was it different?
It in the 12 years I've been doing this, it was more violent than I've ever seen. The rates were crazy. Not only from the southeast, from the warmer states into the colder states, but I was pulling a lot of vehicles out of Florida and moving them out to Midwest, Southwest, Texas, Colorado, Arizona, Nevada, and I'm still feeling it right now. It's not as aggressive, but I mean, I couldn't get away from paying less than $2 a mile for a single unit, going 1,500, 2,000 miles. And when you send that invoice to your client, they're like, well, what the hell is this? And you're scratching by, and I was almost dumbfounded, and they think you're trying to like retire off of them and hitting them with a crazy rate, and so you can have a crazy margin on your side of things, but it just was the reality of it. So you look back what's going on. So you got the fuel crisis derived from the Middle East. You got the snowbird season that we deal with every year. And then you look even further back in the beginning of the year and you had the whole, CDL crackdown brought on by the White House. So I guess the trifecta of that resulted in a very expensive, very difficult to cover freight or cars rather season. And again, I'm still feeling it. We get these news out of Florida out to, AZ and Colorado and whatnot. And like, here we go. They take days to book, especially if you only have a single unit. Obviously when you got multiple cars on the trip, it's a little more enticing for the driver. But it's been tough. And the clients come back and they say, do you expect any price decrease once the season's over? And I say I assume so, but I mean, fuel seems to has, I guess, kind of leveled out, but it's not gotten much cheaper. And even with fuel, potentially dropping in the future, I mean, the market is not going to change with it right away. There's going to be some lag time. People are still going to expect to be paid certain rates, and suddenly you're like, well, the fuel's down, but I still need 225 a mile from Florida to Texas. You're like, okay, and so that's definitely been a challenge, especially when your client's asking you to predict the future, essentially. So, something that I've definitely been in a pinch here during this snowbird season.
Okay. I mean, that's uh, violent is one way to describe it. Um,
Yeah,
hopefully it won't be that way next season. Ezra, when you
yeah.
hear sort of those comments and like what you're seeing, and I know you have a combination of owner operator trucks and then company owned trucks, like how do you guys think about your lane prioritization and what you do to sort of, whether it's snowbird season or whatever, you're seeing in the market, prioritize certain lanes to build the biggest business that you can?
Yeah, so we start by looking at the data, right? We're beginning to do a lot of data analysis uh, because it helps us first understand the historical network dynamics, where we're moving, and which lanes are keeping us the busiest. Then we look at our broker relationship. So we have brokers that consistently give us a lot of freight or freight that actually fits within our network. So it helps us optimize those balanced lanes. Um, and some of it that is can be very lucrative as well. And then we also look at the payment terms that we have with some brokers because in this type of market where there's a lot of unpredictable variability, whether it's like Doug mentioned, driver capacity, where we have some drivers that are going to lose the ability to drive because of the non-domicile enforcement. And then also, when you look at fuel increases that are really unforeseen, but can be very, very impactful. So we're looking, okay, great. Are we on terms that we can manage effectively? Because, cash flow in a small to mid-sized business is really what you need to manage very closely and be disciplined. So we look at that, can we manage the relationship? Do they pay on time? It's this one of the a broker that may have historically not been as consistent. And then we look at the lane data that we have that we pull from Super Dispatch and we do some analysis. Can we connect those lanes into other lanes to minimize our empty miles? And then look at route planning because now we're looking at not only where we're going, but are we going to have enough hours on the driver's clock to meet those needs? And because that could really impact our profitability if our driver gets delayed for a host of reasons, weather, traffic, and hours of service, they may have to sit somewhere for pretty much half a day or a whole day. And we try to approach the the route selection from a perspective that gives us a better understanding of historical data and then what's going on right now. And then based on that, we said, okay, great, we're going to focus in this area, and because we have enough capacity, we can always shift if we need to, but understanding the potential impact on repositioning cost, not only from a revenue perspective, but also from a driver time perspective.
Okay. That's great. So tons of data. You guys use tons of data to inform your decisions. And will that data say sometimes like, hey, we should reposition a, a portion of our team to, the Phoenix Metro or whatever?
Yeah, the recently what we've been doing is we're pulling data weekly and then monthly to just really understand temporary and longer term trends. And then there's some lanes that we can say, okay, we can move, 4 units into this particular lane in this particular period of time to optimize that. And then when possible, because this is all kind of, a timing game. Do we have the available capacity to move it in that lane? But when we do, then we do see the improvements.
Yep. This was not on the preset question list, but now I'm just curious. The United States is performing well in the World Cup. Is the World Cup having any impact on the movement of vehicles from your perspective? Like,
I can tell you, we have a lot of drivers that are taking sometimes longer than they should. So that I would
um,
say, negligible, but sometimes noticeable in a particular
yes.
subset of drivers.
Yeah, I've not noticed any difficulty booking anything with the World Cup.
Okay.
But did you see that
Um,
shootout last night?
yeah. I mean, it was incredible.
That was incredible.
Uh, not we should we just pivot and start talking about the World Cup for the next 20 minutes or um so okay, I think that's good insights for the audience. Let's move to some challenges you're facing, some things that you're seeing in the industry. I think the big one that we're sort of seeing as a platform is double brokering is sort of the age-old um, fraud issue. But I think that there are new fraud issues emerging, particularly around stolen vehicles, and how cyber criminals are using pretty advanced attacks to um, to infiltrate accounts and get access to vehicles, and then poof, before you know it, vehicle is no longer around.
Yeah.
So Doug, what are you seeing from like is this a thing that you're seeing in your business? If it's a thing that you're seeing, how are you changing how you vet carriers? Like what are the processes and
So
safeguards you've put in place?
I was required a couple years ago to uh, upgrade my insurance policy to include a cyber insurance, right? And I said, one, what is cyber insurance? And two, why do I need cyber insurance? It's another pretty hefty cost on our annual policy with our insurance provider. So I learned that the client that requested it, essentially, they had someone reached out to them. One of their clients reached out to them and said, "Hey, can you ship me 8 trucks to our location? I think it was somewhere in South Florida." And they said, "Sure." And so they told them we need the trucks to, this year, this make, this model, some nice trucks. Like I think they're either F-150 or F-250, Lariat type thing, 4-wheel drive, extended cab, long bed, the whole get up. And the trucks got delivered, and all of a sudden, the they sent out the bill for payment of the trucks, and the client says the payable team says to the client, "Why did you send me this? Like we didn't order these." Well, the client, the buyer, if you will, the alleged buyer, their account got infiltrated, their email got infiltrated, and these 8 pickup trucks were sent to this random warehouse in South Florida and all stolen. So that is why we now have to pay a lot of money a year for cyber insurance. So I guess cyber insurance protects all parties involved from someone, essentially getting their account hacked or their email hacked and, stealing vehicles or stealing property. I'm sure it's, it's not limited to vehicles, but stealing property. Knock on wood, I've never had a stolen car issue. But you mentioned double brokerage issue. Every day we deal with, that potential. One of the greatest parts about Super Dispatch's review system, not just Super Protect, but with the rating system or the negative rating system, you can tap in there and say, I'm giving this negative review because of double brokering. That it's a, shipper slash broker help each other out tool, and it's been great. I mean, and then of course you have all these other tools in place to vet the carrier on the front end of things, make sure they're doing things legitimately. But even with all this stuff in place, you still get the bad apples sneak through. A couple weeks ago, I had a guy at delivery. The client calls and said he won't release the car because he wants COD. We don't offer COD. It's not our payment option that Tarpon has. And I'm trying to call the carrier. I dispatched the order on and they're not picking up. So I called the delivery location back. I said, let me talk to the driver on site. And coincidentally, it was a driver I'd known, and after doing some digging, I learned the load had actually been triple brokered, and the carrier that I brokered it to, I think skimmed like $900 off the top. Anyway, I was able to, we got lucky here. I was able to figure out the actual carrier because I'd been established with him for some odd years, and we had a relationship, and I was able to cancel the order on that, triple broker carrier and send it direct to that carrier. But the whole double brokering issue, it's we've been facing it for about a decade, and it seems to get worse every year. You have more bad actors showing face every year. So the Super Protect tool has been great with the monitoring, being able to check lanes, the carrier services. It shows, some of the software show carrier has been inspected in the southeast, and suddenly they're asking for five different loads on the west coast. Something is not matching. So having these tools in place is huge for a broker, or even if a carrier is getting a load from an alleged broker, that carrier needs to have the due diligence to vet that broker and see if they're actually a broker and see how legitimate they are. Because there's no telling if they would ever get paid. Like if I didn't get that guy on the phone and figure out who he was, who knows if he would have gotten paid. And that's why he told me, he said, Doug, I got a weird feeling in my stomach that I'm not going to get paid, and that's why I released these cars. He's like, I was waiting for the Zelle to pop up on my phone, or I was not going to unload these cars and I was going to take off. So, it's not just a broker thing. It's also, the carriers need to make sure who they're getting a load from is a legitimate brokerage, and it has legitimate funds and so on and so forth, and has legitimate brokerage authority.
Yep. Carriers need protection too, no doubt about it.
100%.
And then for just for the broader audience, Super Protect is not a product that we have released yet. We're actually launching it in early July. It's been in I would call it a private beta for a couple months, and it's going to be a tool that we expose to shippers to help them ensure that the carriers that they are dispatching loads to are of a high quality from a anti-fraud perspective. And so that example that Doug gave of, carrier typically works in Southeast. Why all of a sudden are they, requesting 50 loads in Chicago and 100 loads in Washington State? Highly unusual activity. Which protects the shipper and protects the carrier, because sometimes the carrier's account has actually been compromised and they may not even know it yet. And so we want to protect both parties in that situation. Ezra, what are you seeing from a carrier perspective around how you're keeping your account secure, and anything that you've seen come up in the past few years as it relates to the fraud dynamic?
Well, like Doug mentioned, it's something that it's ever increasing. From a carrier perspective, we run into similar issues where, we had an experience a couple of months ago in another platform where our account was hacked over the weekend, like Friday night, and on Saturday morning, the bad actors tried to grab two high value units. It was a McLaren and a Range Rover. And luckily, our weekend support noticed that there was an odd transaction, and they actually tried to log it into the account and couldn't. So they ended up contacting the support of the platform. Long story short, it literally took us almost 2 days to actually resolve that issue. Luckily, they weren't able to pick up the units, and that happened a couple of times in like a 3-week period on the same platform. So, we trained all of our dispatchers, do not click on any link, continuously, check your credentials to make sure that they haven't been hijacked. So that's really, it's a challenge. On the side of bad actors, double brokerage, I think that's an area that I think it's been historically abused because there was regulation but not enforcement. So a lot of bad actors will literally just grab MCs, burn them, and keep doing this over and over. I think now in the last year, we've seen that shift 180% as far as enforcement with the introduction of a lot of the camera networks, national camera networks, the Genlogs, the Flock cameras, that really now enable law enforcement, not only in DOT, but across the country, where they can literally see where the driver logs are saying he was versus where the unit was actually spotted. And I think that's very quickly beginning to remove a lot of those bad actors. Now, like anything in technology, as quickly as we begin enforcement, there's another set of groups that trying to figure out how to bypass enforcement.
Yep.
But I think what that is doing from a carrier perspective, it's really cementing the understanding that safety now it's paramount. Because when you think about vetting tools, they're all focusing on your CSA score, like you said, where you normally move, and all that data is actually now visible. So I think that's going to help begin to improve the both the carrier and the broker experience.
Yep.
Adversely, though, it's going to create a greater shortage of good carriers because
Agreed.
the shady ones that a lot of questionable brokers were using will no longer be able to be insured. Because, it really comes down to insurability. Uh, and now with the Montgomery decision that makes, in certain cases, the broker liable for any accident that the carrier is involved, I think we're going to see that quickly evolved and get some of those bad actors out of the game.
Yep. Okay. I think super insightful from both of you guys. Thank you. Last topic, and then we're going to open it up to questions. Um, the future. You guys are living in today's world, uh, and it's evolving quickly. You know, Ezra, you've talked a lot about data. Digital workflows are here. They're not nice to haves. They must exist. Um, this is for both of you guys, but what do you see in the future of auto transport that helps you run a better business? And what are you guys thinking about, whether that's AI or data differentiation or whatever? Doug, why don't you take it first?
Yeah, so the exciting part about AI and the automation of these processes is using those tools to enable like myself and my staff to focus on the less black and white tasks of transportation, right? Putting out the fires, handling situations, so with the use of AI, automating accounting situations, automating dispatch situations, tracking situations, handling the black and white stuff. Again, allowing us to build clientele, allowing us to service our current clientele, handle situations with carriers, so on and so forth. As for the data, I mean, I've just in the few years I've been working with Super Dispatch, I've seen Super Dispatch release more and more data that is helping my team and the industry as a whole get ahead of challenges, get ahead of pricing, using that information to help our clients understand where or why the pricing is the way it is instead of just trying to kind of formulate something and just a little email, being able to provide them with real-time empirical evidence as to why things are the way they are really helps justify the pricing, justify whatnot, and it builds trust really, you know. They know that you're not just talking out of your rear. You're using real hard evidence to help them understand the current state of the market, especially this year. I mean, it's been hell, really. As mentioned, between the fuel crisis, the CDL compliancy crackdown, and the fraud. Really, the fraud. I mean, it's every day. It feels like they're trying to get attacked some way or the other. You know, you got sketchy companies bidding on your transport. So you know, that's as for the future. You know, having all those tools, actually using all those tools, and allowing for the change. You know, it's that's always a challenge, right? Changing your ways. Like lately, the volume has picked up over here, so I've had to implement different processes in my office to improve efficiency and cut down on, you know, cut down on tasks that are more black and white. You know, using data integration. I know we're working with Super Dispatch with our internal transportation management system for those two softwares to marry to help my team be more efficient and again cut down on the easier tasks, if you will.
Okay, that's great. Ezra, what do you like? What are you seeing from an AI perspective? What do you think the future looks like? How will VG Auto be different in 3, 4, or 5 years than it is today?
You know, what we're looking at is, again, it's all going to be data driven, but in a way that is really going to meet our needs as well as the customer. So, biggest thing that we're noticing now, and it started probably, I would say, in our case, uh, less than a year, it's integrating more data analysis into every decision making. So we moved away from the gut feeling because, we have a lot of people that have been doing this for a long time. We have a great operations team to really making decisions based on what we're actually seeing the trucks do. So that goes from, we pull the history, we see the behavior. What I look at in the future, it's integrating more of that into every process across our operation. So if you think about um, data, it's going to become more intrinsic of the process and is really going to focus on the three primary things that really uh, data adds value if you apply it, which is first of all the value, the quality of the data, right? Is it accurate? Is it clean? Because if not, it's like the old saying, right? Garbage in, garbage out. So that's number one, understanding that from the data entry, from the load creation step, from that point forward, the data is accurate. Second is what are we doing with the data, right? What decisions are we making? Are we focusing on, and we have like three primary objectives, right? We want to make sure that we optimize the equipment and that we improve the customer and the driver experience. So that means looking at what is that the customer finds important, their KPIs. Maybe it's on-time pickup, on-time delivery, non-involvement of humans into their billing process, whatever that may be. And then ultimately, it's in our end, identifying through, AI agents, automation, and other trend identifying tools, being able to identify where the non-value add work is at, and then giving that to an agent so we can either move those people, retrain them if we need to, into value add roles. Think about the customer facing relationship, the driver facing relationship. So at the end of the day, it just makes the workflow a lot easier for everyone. And I think that we're going to see that accelerated just because AI is becoming so powerful, not only in the speed, but the quality of the work. So that's where I see where we'll be in the next, 3 years.
Yep, that's great. It's awesome to hear, you all talk about the importance of AI to your business because I think it's the way that we're just thinking about it internally is um, there are two components to AI. One is how we better operate our business more efficiently, and so we're using tools to, for example, automate customer support tickets, and we get a lot of them, you know, tens of thousands. Um, and we've gotten to a point where we believe we can deliver as good or a better customer service experience in certain scenarios. I think, Doug, the black and white, I think that's sort of a good way of framing it. There's a lot of gray in the world.
Yeah.
Uh, and gray is where our team needs to spend the time. But there's also a lot of black and white. Um, and so where can we optimize that, especially using AI agents to get the customer an answer faster so that they can go on with their day and not actually interact with a human and be more than satisfied. And so we've seen as we've increased our customer base by 30, 40%, we've actually seen a decrease in the number of tickets that are handled by our internal team because of the tools and technology that we're using. So one is internal and how we're doing it. The other is providing tools to customers to help automate your business. And so, we're in very early stages of a product called Super Agents, where we're basically trying to um, help businesses automate the black and white. Hey, where's my car? When's it going to be there? All the types of normal questions you guys get thousands of times a day. And if we can plug into your communication systems, then we can do some of that communicating. We can provide you tools so that you can do that communicating autonomously. Um, with that, we'll move to live Q&A. Casey, I'll do the first question because I'm reading through these a little bit.
Yep.
There's sort of a theme, we have big customers on this call that have been around for, dozens of years, like you guys. And then we have some folks who are just up and comers, just getting started. So, question for each of you guys. If you were just getting into the brokerage business or you were just getting into the carrier business, uh, what's one piece of advice you would give a new entrant into the business to be sure that they do and think about?
I'll go. Um, be ready to work a lot and work hard a lot.
Okay,
Because I've been doing it for 12 years and it's not changed.
it's good. Ezra?
Yeah, for new entrants, I would just say you need to be flexible and try as much as you can uh, to standardize your practice. When you have one truck and you do it all, it's one thing. When you have one driver, two drivers, you want to make sure that they follow a step-by-step process because it minimizes all the headaches that create the challenges in the industry, from paperwork to claims to nobody told me kind of thing.
Yep. Yes, this is something I also preach, which is there needs to be some level of standardization and process as you scale, or everything falls apart. Casey, what else are you seeing in the chat that seems like good questions? There's a question around, and Ezra, you hit on this a little bit, but obviously a big Supreme Court ruling with Montgomery and Caribe. Like, Doug, how's that changing how you're vetting carriers, if at all? Like, what are you doing to ensure that your brokerage is
I
um,
mean, you know, we have for years now had in place these vetting processes, and um, our software partners, are continuously coming out with more ways to, you know, tear through the bad apples, more checkpoints, more technology, and whatnot. But one thing I find happening often with my team is that we're in a bind where clients like move the car, move the car, move the car, and part of you wants to kind of bypass the process and not go through all the P's and Q's of vetting the carrier. So I'd say you got to do it front to back every time. You can't skip the process. You can't get too comfortable, too complacent. You got to run them through the ringer because it only takes one time.
Yep.
It only
Is
takes.
there anything you'd add?
And I encourage everyone, I'm sure many of the audience do, keep a list. We call it the blacklist of which partners you don't want to do business with notes. What happened was that, we provided a service the load, and then they said, oh, we're not going to pay you because, there was one paperwork missing, or, you arrived an hour late. Little things that it is really creating an internal standard of what you can work with and then what is unacceptable. And then you start building through that process, you start building relationships with like-minded partners that they say, okay, great, we understand stuff happens once in a while, but when it becomes a trend, then it's a different conversation.
Yep. Casey, what else have you seen out there that we should?
Similar for and theme for both you guys. Someone's asking about what are the biggest operational gaps you see all the way between like quoting to getting actual status updates, and how do you use technology or Super Dispatch to help close those gaps without kind of putting aside the personal relationship in your business?
Go ahead, sir.
The one thing that we are using, the reporting feature of DataTruck frequently for, it's understanding how much are we moving empty, right? Which markets, which customers. So we really can understand, hey, when we're looking at pricing, how we can address pricing. Because all those little factors go into play. Particularly in this market that is getting tighter and tighter as far as capacity, you really need to make those calls with enough data to understand the true cost of the business, whether it is fuel, whether it is the repositioning time, or whether it is the billing. If you have a customer that pays you on 7 days or one that pays you in 45, those are all factors that come into play when you're making those decisions. And those are the gaps that can really make the difference between a load that looks profitable, but it's really not when you add all the numbers.
And to Ezra's point, on my side of it, it's more, quoting. As you mentioned the whole quoting thing. You got to quote smart. You got to not just consider the mileage. You got to consider, the size of the vehicle, the destination, the pickup. Is it an area where there's commerce? Is there an area where there's reloads? Or are you going to send a guy into somewhere where he's going to have to deadhead 200 miles to find his next reload? Quoting smart to cut down on, taking loads that you're going to lose your behind on, or, taking loads that you simply can't cover. And then it comes back to you looking like you don't know what you're talking about. And your client said it's been 5-6 days. What's going on here? And, from a brokerage standpoint, the last thing you want to do is say, oh, I need more money. It's like, why do you need more money? I asked you for a quote. I gave you all the information you needed. You provided me a quote. You need to stick with this. So, again, from a brokerage standpoint, quoting smart is what it's all about. You got to look beyond the miles.
Great. We have time. We're over time, but we'll do one more question. For everybody who did submit questions, we have a ton in here. So we will get answers to you. We'll email them out to you after the call. But kind of blending the two themes of looking at data and how much fraud has evolved. What's maybe a piece of data or information you look at today when choosing a reliable move that you maybe didn't look at a year or two ago?
One of the biggest pieces of data I use, and this is a great tool that comes with Super Dispatch. It'll tell you under Super Dispatch how many orders the carrier has accepted in a 60-day period. And there are carriers out there that it'll say that they have accepted 1,050 loads in 60 days, and then you go look at how many assets they have, and they have one truck and one trailer. And that's not always flagged. The software doesn't always flag it. It's not necessarily a red flag and whatnot. So you inquire. You say, how have you moved this many loads in 60 days with one truck and one trailer? Your insurance policy says you have one truck, one trailer. FMCSA says you have one truck, one trailer. If this has changed, I need proof. So that is a tool that I've used for some years now, and even before a lot of this other anti-fraud software that I was introduced to a year or so back.
Awesome.
Hey
From the
Casey,
carrier side,
there's a few questions in here that are sort of super dispatch specific. I think while we have the whole audience, let me just hit on some of them because they're product specific things. So there's a question, is this going to be recorded? Yes, we'll send the link. Um, do we plan to add carrier search functionality? The answer is yes. Basically, we are, I don't have a timeline. I don't have an exact product to share with you today, but I will tell you that we have a product team very focused on uh, the supply and demand dynamic. And one of the things we're going to do is we're going to make it easier for carriers to find loads based on a certain set of criteria. And we're going to use algorithmic data to uh, give you the carrier access to a better set of data to find loads that you want. Because we think that that's a big opportunity for carriers, and we think that's a big opportunity for the marketplace in general, and will drive higher liquidity and help cars move faster, which is our goal. So we're going to make it easier for carriers to find loads, and we're going to make it easier for shippers to find carriers based on a set of criteria. And so you're going to see sort of this two-way match. We already have something, but I just don't think it's as good as it could be. And I think in the advent of all the data we have and the evolution of Gen AI and all of those tools, like I think we can build a pretty badass data science model that's going to deliver a cool product to customers. So that's search functionality, which will be a two-way thing. Um, what can you do at the auction level on gate passes? So one thing that we have done, just so that everybody in the audience knows, is, and I don't know that we've rolled this out to 100% of customers, but we are going to if we haven't. We have something called gate pass protection, where shippers can uh, location protect the attachment. So you have to be within, call it a quarter mile or half mile of the actual facility where pickup is happening to get exposed to the gate pass. And that's just a small thing that we're doing from a fraud perspective. Like we got to do 100 little small things to change the dynamic, but I think that that's an important one.
Yeah, we use that
Um,
tool.
has that been good for you, Doug?
Yeah, for sure.
Um, and then I think those are the big product ones that are on here. And then Casey and we'll probably follow up. Is that true?
Yep. I'm going to take all these questions that we didn't answer. And so along with this recording, you'll get a doc that will have our collective answers to those questions so that we'll get all the information to you guys.
Cool. Hey,
Awesome.
Doug, Ezra, thank you guys for being customers. Thank you to everybody who joined the webinar for being customers or considering Super Dispatch. Hopefully this was insightful. Hopefully you all learned something. One little tip to improve your business is the type of thing that makes this totally worth it. Download the report. Reach out to Super Dispatch if you need anything. We are here for you. And have a great day.
And register for SuperCon. Come see us in
Oh, and
Orlando
don't
in
forget, yeah,
September.
if you're an asset-based carrier, we'd love to have you at SuperCon. Doug's dad would love to have you at SuperCon because it's his birthday.
Yeah.
September 15th and 16th in Orlando, Florida. We hope to see you there. Thanks, everybody. Thanks,
Thanks,
Ezra. Thanks,
everyone. Have a
Doug.
good day.
And thank you, Casey, for
Thank
putting
you.
this on.
Bye,
Ciao.
everyone.
Thank you, Matt. Doug.